The stock market continues to be really strong, but what stocks stand out amongst the rest? In this video, I'll be talking about some of my top conviction stocks that I own or am looking to purchase into in this video. Starting out with the S&P 500, ticker symbol SPY. This is, of course, the broad market here. And what we can see is that the overall market is right back towards those prior all-time highs. And so what can you do, as I've been discussing a lot in my videos here recently, what can you do with all-time highs? Well, long story short, trying to call the top in markets is a really tricky trade and not something that I'm willing to do. So the path of least resistance here, to me, based on the trend, is still to the upside. However, I am not particularly favorable, as I've been discussing in my videos recently, about the macro circumstance in the US. We have some labor data that looks a little rough and inflation that's hot. Let me show you. I've got a heat map here that shows a significant amount of the US economic data, our macro screener within the stock box. What we can see here at the bottom end of the table is that our labor data has been coming in pretty soft recently. The non-farm payroll number missed by 53,000 jobs. ADP missed by 19,000 jobs. Job openings were weaker than expected, and jobless claims ticked up last week. And we could see probabilities for a Fed cut next week are pretty much at 100%, with a 90% probability that we're going to cut by 25 basis points or 0.25%, and of course a 10% chance that we're going to cut by a whopping 0.5%. Now, if this happens, by the way, I would actually suggest that that might be a little bit of concern from the Fed, that they may be behind the curve, meaning the economic data is slowing down too fast and they need to try and get back out in front of it. This, to me, would actually signal a little bit of concern from the stock market and possibly cause some selling. But I think most likely we're probably just going to get a quarter point cut. And one industry that's been doing really well in response to this is XHB, or the home builders ETF. Obviously, if rate cuts are back in the pipeline and mortgage rates could potentially come down, that could cause home building companies or stocks to do well. We saw a pretty strong rip in response to the increased probabilities of rate cuts. Even despite a soft jobs data point, the market took it as a positive because, again, it pretty much locks in rate cuts. Of course, this also sent gold and silver roaring to the upside, and I talked about in my previous video that I do still have a silver long position open as well. And here's just a look at gold miners, for example, absolutely going parabolic here. And while I can't justify buying them at these levels, if you were to get a pullback in mining stocks, these actually look pretty attractive to me. But not all sectors are getting the same love. Take a look at industrials, which are actually trending lower here in response to this, because slower jobs data could signal that the economy may be going into a slow period, which is less attractive for certain companies. Like, for example, ticker symbol DAL, or Delta Airlines, which if you've been watching my videos for a while, then you know I used to own this company and I did officially close it out for a profit. I do think that this stock actually has room to come down if we do see a contraction or slowdown in the economy. That is not particularly attractive for flight demand in my view, and so I'm not super bullish on Delta Airlines at these levels. And looking at the stock analyzer tool on the stock box for Delta Airlines, I don't particularly love the valuation here either. I think the stock is a bit expensive, both in the price of it as well as the valuation using the financials. The top stocks feature on the stock box helps to scan a collection of stocks that, based on financial readings, sentiment data, and technical readings, look a little bit more attractive. For example, NEE, which in my opinion is a potential buy right now. Actually, I did buy some shares. And while the stock is down from where I purchased it, I would actually be willing to buy a little bit more if it went down to 67. I do think that utility companies could actually hold well if we do see a little bit of slowdown in the economy, especially with those rate cuts. I think that they actually help out utility companies, which are pretty debt heavy type companies. And check out UNH, UnitedHealth Group, actually breaking out here, a little bit of a pop above that 320 mark that we've been talking about recently. And I actually think that this could be a breakout that has legs to it. This has been a long period of consolidation for the stock. We sunk all the way down to $240 a share. We've now rallied back. So if we do bounce back or pull back, I should say, back into this area, to me, this looks like a stock that now has some upwards momentum, and we get some pretty good readings on the stock box. Check it out. You can see UnitedHealth is getting a +7 score within the stock box. That simply means that, again, across the financials, sentiment, and technical readings, the stock looks pretty attractive right now, and we do have some momentum forming to the upside. While it is a little bit stretched at current levels. If we get a pullback, to me, this is a possible trade. And by the way, if you don't have access to the stock box, now is a great time to pick it up. We do plan on raising the price, full transparency of the stock box in the coming weeks, and we're offering a huge discount right now. The software is 40% off, but for viewers who are watching today, you can actually get 45% off if you send us a direct message using the first link in the description down below. By clicking that link, you'll speak directly to a member of our support staff who can get you some information about the stock box, answer any questions you might have about the software, and can get you set up with a payment plan if that makes it easier for you. It's a one-time payment to get access to the tool, so take advantage of the huge discount before it ends. So UnitedHealth Group is definitely one of my more interested trade setups if we can get a little bit of a pullback there. Let's talk about Tesla, which I've been selling calls on Tesla for a little while. The stock has been in consolidation for several months. Let's take a look at the positions. Today's video is sponsored by Moomoo. And if you haven't heard of Moomoo before, they're a one-stop global trading platform with over 26 million users across the US, Australia, Singapore, Canada, Malaysia, and Japan. And Moomoo offers $0 commissions on stocks, ETFs, and options trades. They also offer free level 2 data and real-time options chain data, no extra charge. And the Moomoo platform is super advanced. They offer a really powerful options trading tool, and you can even track latest public figures holdings like Nancy Pelosi's directly within their portal. And if you want to learn something about a particular stock, just ask Moomoo's AI feature. With this tool, you can ask for trading insights on your favorite stocks. And if you want to tap into what institutions are buying and selling, check out their institutional tracker. This tool allows you to explore top institutional holdings. What sets Moomoo apart is their incredible platform for researching stocks, checking out all sorts of different analyst rating tools, and insider holdings and trades. And for a limited time, as shown on the dates on the screen right now, you can get up to $1,000 in Nvidia shares, plus 8.1% APY for US users. As you can see on the screen, please follow the criteria here and make sure to use the link in the description to get the full context behind this offer while it is available. It is available for only a limited time. And are you already trading with another brokerage, but all these tools sound pretty cool? Well, I think so too. And they're currently offering a really cool 3% match on the first $1 up to $20,000 transferred from another brokerage. So if you're looking to take your trading tools to the next level, check out Moomoo and take advantage of some of the offers available using the link and details in the description of this video down below. Now back to the video. So I currently own 400 shares of Tesla. Let's take a look at the positions that I have, which are 2 separate covered calls. So I own 400 shares of Tesla, and I've also sold 4 calls against my position with 2 different strike prices. I sold 2 $400 calls on Tesla and 2 $355 calls on Tesla. I'm going to explain a covered call through AI overview from Google here. So a covered call is an options trading strategy where you own shares of a stock, as I just showed you. I own 500 shares, and you also sell a call option, which is a bullish bet. You're selling a bullish bet. So it's kind of a neutral to bearish strategy against those shares, giving someone else the right to buy your stock at a specific price, at the strike price, before a set date or the expiration date. This strategy is used to generate income from the options premium received and can provide some downside protection. And so I own those shares. I'm up pretty nicely on the position that I own, but then I've also sold calls, which one is down about $90, one is down about $500. So with these positions, what's the idea? Well, if Tesla essentially goes sideways or down, I hedge a little bit of my downside. If the stock goes up substantially, then I could be eventually forced to sell out of my position for a profit. So technically there is no financial risk to selling covered calls other than the potential that you miss out on gains if the stock were to rip beyond the $355 or $400 price by expiration. Again, if this thing went up to $500, I would be leaving a lot of gains on the table because I sold calls to someone else. I essentially rented out my shares to someone else. But in exchange for doing that, I collected some pretty good income on the stock, and I wouldn't mind letting go some of my shares of Tesla, which is why I sold pretty close to the money, or it was slightly out of the money when I sold it, but a call that was much closer to current price, as well as one that is much further out. And naturally, this one is much less likely to get called away, but this one is very possible if you get a couple days up in Tesla prior to expiration, which, by the way, is the 17th of October. And some of you guys might remember that recently I sold out of my shares of Nvidia, and I am watching this one because because if it does give me a dip, I'll probably look to get back in. But since I've sold it, it's down a little bit here. We've really seemingly, again, lost that kind of upward trajectory momentum. We went from an up market to a sideways market here, threatening a possible downturn in the stock. A lot of this has been in response to the massive, kind of earnings report and forward-looking guidance from Broadcom. And one thing to think about with Broadcom is that they share some customer basis with Nvidia. And part of the reason Nvidia has been sold a little bit here recently is the perception that Broadcom could start to compete for some of the clientele that Nvidia has sort of had a strong moat around them. So the question around Nvidia's pseudo-monopoly type style is under question. I think that's part of the reason the stock has been pulling back. So I would love if the stock did continue to push lower. That would give me a chance to potentially buy back my shares and get long again. I think Nvidia again is the pick of the two that I still would prefer, but have mentioned in previous videos that I think the stock is pretty expensive and could be due for a pullback, not just Nvidia, but the broader market itself. As I got done discussing earlier, I'm not going to try and time per se the overall market downturn, but I think that prices are expensive and I'd rather wait, keep some cash on the sidelines in case we get a dip in stocks. And because we've been talking about stocks that are dipping, let's also talk about stocks that are not dipping at all. Robinhood Markets. And this stock both loves me and hates me. It's one of the best stocks that I've ever purchased in terms of a percentage gain, but we are back in the red when it comes to the calls that I sold against my Hood shares. Why did the stock jump 15% in a day? Well, here's why. Robinhood shares soar 15% after getting a long-sought addition to the S&P 500. This is awesome and really exciting for Robinhood shareholders who believe in the company long-term. This is a great spot for them to be. I believe they, were always destined to be in the S&P 500, and so it's exciting. And of course, got to be a really cool thing for the CEO Vlad and his team to have made it this far. I mean, this is a crazy story to have watched in the last few years with, of course, the GME stuff, right? The GameStop. Everybody hated Robinhood, and Robinhood became the big winner out of all of that, believe it or not. However, with respect to the system here, the stock box does have a pretty neutral score on Hood at these levels. Again, the valuation is troublesome for me, where again, I love the stock. I think it has a lot of potential, but I do also think that it's a little bit stretched to the upside. So what I'm probably going to do is I'm going to continue to sell calls on this name because I do think that it has room to consolidate for some time or to pull back. I'm still a shareholder. I have 600 shares long on HOOD, and I sold the 125 calls. So I do have some upside if the stock continues to rip higher. I do have some more upside in the stock, but beyond 125, I will be forfeiting those gains with the calls that I've sold. And the calls that I've sold go out to October 17th. And remember, if you like these videos and would like to see more of them, let the YouTube algorithm know that you do want to by hitting the thumbs up button and subscribing to my channel, turning post notifications on, all those good YouTube things. They really support my channel and also will tell YouTube to share this content with you more frequently. So thank you for watching. We'll see you tomorrow.